Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We'll see whether YouTube kicks in here. Oh, looks like it's kicking. Yay. Anyway, welcome back to the Frivolity. Today, I guess telephones are ringing. You know what? I'll have to leave that for now. All right, that's kind of interesting. There's a nice start to your video here for you. What time is it? It's 10:30. I wonder who that was calling. Okay, so let's get on with your recap and everything. This is a great analogy of how amateur this production is, but we try our best. And again, I've told you guys before, really hope you guys get some value out of the conversations here today. Always try our best to at least give you something to think about. So here we go. It's about 10:30. We had actually a very long daily brief here this morning. We usually start at about 9 o'clock on the West Coast. We had two reports. Our CTO, Sjord, gave us a report on some of his trading of late. Booked a really nice win on Flow Traders. And also told us a little bit about what his models are suggesting for the European big indexes. And also gave us a nice little summary on his thoughts on Bitcoin. And I think in essence, what we're seeing is confluence of opinions, let's say. So I think a lot of people are seeing basically the same thing. We'll get to corn in a bit and hopefully reiterate that message. So, as well today on Mondays, about once or twice a month, Jamie comes on the call and talks a little top-down fundamental analysis with the community. Did a really cool report today on BTC and stock market correlation. As well, of course, a lot of the econs look like absolute ski slopes right now, so there's really no point in looking for W's just yet. And really that's, the top-down fundamental picture is kind of clouded right now, and so his message was, well, we're not getting any direction from this stuff, so better cool your jets, which, frankly speaking, for the broader public, love the idea of dollar cost averaging. It's a nice, simple way to get you into the market. Nanny Nibbles, little old lady, whatever you want to call it. Pick your asset that you like and do some good fundamental analysis into why you like it and what's the justification for you fundamentally buying your asset. And just slowly, if anything, take advantage of this chaotic time in the market to just slowly dollar cost average your way into these names. And if the market crashes, hey, everything's going on sale. It's discount time. For the traders, you have to understand 30 years I've been in this business. This is absolutely the most chaotic I've seen of the market. And frankly speaking, we've never lived through this kind of scenario before. What is interesting, though, is if you actually go back and dig through the newspapers from the Spanish flu 1918, there are actually a lot of news headlines actually that are extremely similar to exactly what we're seeing right now. And I find it a little curious why more of our media haven't dug into how society handled the crisis then and what were some of the news headlines, because it's shocking how similar they are. And we talked a little bit about that in the Jamie's presentation. So, to sort of, I like this free forum. It's just supposed to be a nice little sort of, maybe 5-10 minute plug for the site or any services that we have coming up that you might be interested in. We did Broiler Chicken Show yesterday. It was a good an hour and a half long. So I really enjoyed that experience. And then we spend maybe about 20-25 minutes just reviewing these overall, just this simple market matrix that I put together. So before we get into the actual charts, we should probably just do one more plug. Just FYI for everybody, we have a new school intake coming up in about a month. Actually, it's a little less than that. About the middle of May. So, clearly the markets are insanely volatile. They're shorting and longing opportunities all over the place, up and down like a hers, as they say. So, if you'd like to participate but are just riddled with anxiety and confounded by all the squiggly lines, you are more than welcome to join our education program. We try and keep it extremely cheap so that it's not outside of the wheelhouse of considerability. And frankly speaking, I don't think I've never seen anybody else on the net teach as solid of an introduction program to trading than what we do here at TRI, and we build awesome traders. So it's entirely up to you, and this is your formal invitation to join our spring 2020 term. All right, so now on to the charts. As we've been talking about recently, U.S. dollar index, sort of our proxy here as to whether the market's feeling fearful or greedy. If we see this trending lower, to me, it number one is inflationary, i.e., all the world currencies are all moving up relative to U.S. dollar, which in essence means that international money managers and fund managers and stuff, they see potential growth opportunities, not contraction, but growth opportunities, and they're actually going out and putting money to work in international markets. I think our conversation of late has been that we are coiling a range, and the range is getting tighter and tighter and tighter. I suppose we're getting to the point now where you can even see that this range is getting even tighter here. And you could actually, we're starting to get into the neighborhood where things like a straddle might not be such a terrible idea. We have actually a pretty small range. Now we're getting tighter. I mean, maybe we get even tighter and tighter and tighter here. But now you've got pretty simple mark. If we see this index close well above 100, and really the mark is going to be that closing level there. 179, then we're clearly heading up. If we break through these lows, that is going to paint an AB equals CD. That's going to sort of challenge these lows and probably start to trigger these events down in against the bottom of the megaphone here. So we're starting to get into the area where, buying a call and buying a put, that's going to be your total cost invested. And can we see a big enough move outside of this range to offset the total cost and also give you some profit? We're starting to get into some interesting areas here. But our conversation recently has been the range is coiling and the range continues to coil. It's getting tighter and tighter and tighter. That's a bit of an indecision in the market. And if we look at risk on, risk off, I think you can see that. Stocks gap violently higher on Friday. We talked about options expiry, all that shenanigans. There is gaps to the upside. The AB equals CD and the head and shoulders targets are still a little bit higher. So believe it or not, I would not be surprised to see the stock market surge a bit higher here as we head into May. And then on the opposite side, and really you could argue we haven't taken out Friday's highs, so we're still sort of stuck inside that range of that gap. And you could argue the bonds, same sort of thing. We've talked about this at length. There was little buy signals. Then there was actually like a bigger buy signal coming in off of this consolidation, and then a test of these lows, which did not break, and little buy signals came in off of here. And we're still sort of just stuck going sideways in this range. My hunch is if the stock market does break out higher, that this will now M out and start to crap out. But it hasn't happened yet. Can't put the cart before the horse. Interesting too, a lot of people on the site were, quite enamored by this. Although, if anything, this stinks. I've talked about this crude oil market recently at length. I mean, this is just insanity what's going on. But it's a pure function of 2020, folks. But here is the June crude oil month, now that the sort of traders are out of the May. And we talked about this. It was going to gap higher. It was going to probably gap right into shorting trade locations. And then it's almost like I hate to say it, but I almost think this was a total no-brainer trade. that on any sign of that failure after that ridiculous gap higher, we were just going to probably slowly. Frankly speaking, I thought this was going to take a good 6 months to happen, but they're going to do it in 2 or 3 days. But we probably have to come right back down on this June contract back to 19 and a half. But what's got everybody's attention today, of course, is if you look at the spot market and the May futures contract, clearly they've got a squeeze going on here. And somebody has their short and curlies caught in the ringer, no doubt about it. But here we are at $2.34 a barrel for the May contract. And this has, of course, got everybody in a tizzy because you go on some sites and they're reporting this June contract number. Then you go on other sites, and again, looking at the light crude oil futures contract, right? This would be the contract that you're trading. And as we said, they gapped it higher. We knew that it was going to come down. Problem here is that this is the headline number that obviously the talking heads in the media are going to be talking about. And the irony of it all is you can't trade this. It's a non-event, which is kind of funny. If anything, this is a perfect analogy of 2020. I mean, it just doesn't make sense. I mean, $1.58, was it going to go to zero? I actually heard somebody say that the CME said that they could officially have negative numbers on this contract. I mean, what the hell? This is ridiculous. It's a crazy world we live in. And, it's not like you can trade this. Don't get sucked into the idea that, oh, man, this would have been an incredible short. You can't trade this. You're totally frozen out. This is a May contract here. And what's really interesting, too, is if you look at, like, the big oil stocks, like, say, Halliburton or something, it's actually up on the day. Or if we look at, like, Exxon, actually he's down on the day. All right, well, he's come off a little bit, but they're not going to like $1 kind of idea. So it's purely a function of somebody's obviously manipulating that May contract dramatically. Welcome to 2020. Talk about a screwy year, and talk about a tough year to actually like sort of commentate through this. I mean, this is nuts. It's crazy. I think I've told you people, a lot of just sort of Joe Sixpacks, you're probably best off just leaving this market alone for the next year. But that didn't sell subscriptions. What the fuck? Shut up, Brian. How are we supposed to pay the rent with that kind of talk? All right. So, insanity going on in crude, but I think the June contract coming down to fill in the gap, that's probably going to be your low. Interesting, we do have this big crazy day in crude, so I guess it shouldn't surprise us that gold's actually moving up on the day here. We had that big sort of gapping higher day on the crude, and gold got its butt kicked. Now, the crude is down, but it's clearly not down the kind of numbers that May contract is showing. Now we're enjoying a bit of an up. On the gold. So yeah, I think it's further testament to this idea that the markets have to move oppositely. I think we also too talked on Friday about the importance of this sort of head and shoulders level, and we said this was going to be a really important test against these lows. And what's interesting when you look at that gold chart in detail, zoomed in, let's see if I can find it. It's up here somewhere. I think it's over here. I actually think there's a nice long setup that came in there this morning. So there was those lows. There's this, think na levels, that low, that low, that low, that low. There's a whole bunch of lows in there. There is that head and shoulders breakout level, and look how the market just came down and politely put in the cutest little bottom down in here. And interesting too, if we just do a nice 50% roll, this very fast trend line, clearly that was broken here, but so we set up this slower sort of potential. Well, no, actually it's a valid trend line. It's showing resistance up here at about 1730, 1740. 50% level sitting there, 1737. That is the original M structure top. So a nice underside kist of that. That's that classic Wycovian kind of price action. And of course, you can see the big hole in the profile here. So could they rally it back up against this little POC here and then just spend some time filling that in? Sure, why not? And, as we said there a few minutes ago, with oil coming off and it being a down day, I could see gold enjoy a nice little counter trend rally. But please keep in mind, this is an hourly chart. We had setups, I think I was looking for a trend continuation trade here on Friday. Hourly setups, sometimes they crap right out. So they come and go. But in essence, that's what I think is going on in the gold market today. And considering what's going on in oil, it makes sense that gold's moving up here. Once we get up against sort of like this high here, 50% level, original market structure, top of value, be careful. This could be problematic up here. So that's sort of your risk on, risk off kind of conversation today. I get the feeling that the jury's still out and a lot of shenanigans going on around about oil right now that's not really real. If we look at this stock market internal proxies that we like to follow, and I like this study for you guys, you can see we have a 3-bar fractal that fired here this morning. That's a bullish fractal. You can also see this is off of a reload zone, this low here, and we kind of talked about this. Was this going to head and shoulders its way out? So shoulder, head, shoulder, neckline. If we break out now through this top here, that's a beautiful double bottom. And to me, it means that, and really, the capitalists have to make their money at some point. The cliche is sell in May and walk away. So could we have a nice little counter trend rally in the small caps as the stock market works up and fills in gaps and head and shoulders targets and all that kind of stuff into May so that Wall Street can sell at a profit and head off to the Hamptons? Probably. That wouldn't surprise me one bit, folks. It's very business as usual. Specific ideas in the stock market, some of the crypto names that we were buying and one that totally messed around with me, they did really, really well. So at the very least, we can think that we're on the right side of the market there. How long lasting those rallies will be, that's another question. Lots of gaps to the downside. But I got to tell you, one area of the market that seems to be getting a bit more support lately, and it's kind of like they were just getting crapped on from 20 different directions for like 6-8 months. It feels as though they're getting kind of washed out here and they're starting to put in bottoms. Very interested in this VFF, and I kind of like this name because they're in the greenhouse business. Of course, Canada has a lot of greenhouses, and we've got a lot of frozen tundra that you can't do much in the wintertime. So this is a growth industry in my eyes, especially now in our world where we're going to be talking about securing your nation's food supply and all that kind of stuff. I thought it was interesting. Marijuana was deemed an essential service here in Canada, which I find a little bit amusing. But nonetheless, huge tax revenue for the government, so there's no way in hell they're going to fuck around with that cash cow. Long and short of it here is I am starting to see W's come in, and Brian, he likes his W's, so what a surprise. I'm in here on the buy side at 419. Sitting 432 right now, so we'll see how that goes. Heading on over to the corn. What I'm worried about for the corn, which bothers me a bit, is we're kind of running out of this rally window. I've been sort of squawking about this for a while now. At about 20 to 25 days or so prior to the halving event, I've seen Litecoin, Bitcoin. I have heard people say, no, this time it's different, Brian. I'm from Missouri. I've seen a number of these halving events. I'll go this way. So, until I see otherwise, I'll be looking for the same type of price action. But as you can clearly see, somebody's not very happy here this morning. We have, structurally speaking, and I have the line chart on here so you can see the M's and W's very clearly. We haven't really M'd out here in earnest. I will say that if we lose now this closing low here at about 6,600, that's going to be very problematic. I don't see it coming, but that's just Brian's opinion. You know what opinions are worth. If anything, I would want to see this trend line broken and then a nice structural signal on the other side of the trend line. So I do think that we're going to come down and play with these levels. I just don't know whether we're ready to break just yet. And the weird thing about being a trader is it's not so much like, I might argue if you looked at this trading range, top of the range, bottom end of the range, in this area, this is sort of like no man's land. It's actually extremely dangerous to say, I predict the market will go up, I predict the market will go down. From these kind of levels, it's kind of like a toss of the coin. I did like the idea of the fundamental up story as long as we were working our way through this pre-halvening pump window. Given what's going on in the broader economy and the broader world and the insanity of the world right now, is there sort of overriding influences that could negate this? Yep, totally. They always say, history never repeats itself, but it often rhymes. So this might be a situation where we just don't get that pre-halvening pump. We M out here and continue working our way lower. I don't know. Nobody knows what's going to happen. What I will say is if we do M out here and we do close here, well, that's got to reiterate my bearish thinking. And remember all along here, folks, I hate to say it. I don't want to sound like a broken record here. But remember that, where is the chart I wanted to show you? Remember we had said here, and actually this is probably the best place to end this. This is the daily chart. If we start getting that second M coming in through the 50 line, remember there's your first M, that's the teal. Second M's are yellows. If we start getting this M through the 50 line here, then that's going to be very problematic. Also, too, if we zoom out here a bit, we still have some ugly levels sort of floating out here. I don't know whether, if anything, what I would prefer is that we slowly work our way down into this July pivot. I would hate to see us just dump violently here, but if this M does come in here, everybody just be forewarned. There could be trouble ahead. So, if we look, this is a daily chart. So I don't think the daily chart has gone into like full sell mode. Bull was on pause. Now we're sort of like, okay, what the hell's going to happen? What's going to happen? What's going to happen? If we look at sort of lower time frames, this is a 12-hour chart. We could look at this, 6 hours. It doesn't really matter. I think there is that trading range, and this is that magic close level. If we start closing back below here and accepting, then I think that's a head and shoulders. And on balance, we should be thinking just boobity boo and boobity shmoo. Somewhere down in chaos levels and 50% levels. So, and actually interesting, if we look at the profile, you can see there's a nice little shelf there for price to settle into. So, if we do roll over here and we do start closing below, let's call it 6,600, then I think we've got some problems, and we'll probably have to work our way down into this 5,700 area. So it is what it is. It hasn't broken yet, but clearly, we're back on the down note here. And, what's worse about this, I suppose, is, if you just looked at this range alone, we could probably make the argument that, those people that are very slick and on their toes, what a surprise, basically the fail came in right through this reload short zone. Boo, it says boo. So that's the state of the corn at the moment. Not overly bullish, that's for sure. Not ready to stick in a fork in her and call her done. But I'll tell you, we're running out of time on our rally window here. I just want to get that in the lineup. And then we'll go boobity boo and boobity shmoo. So there. Let's keep that on your screen, and let's see how we do going forward. Oh, look at that, eh? Jeez. Kills you when those damn chaos levels line up like that. The only other thing I wanted to leave off with you guys today, I had been sort of talking about bullish setups coming in on some of the altcoins and altcoin indexes and stuff. It didn't really set up the way I kind of wanted it to. So when I saw this, when I saw this developing this way, I was kind of like, crap. So what I was kind of hoping for was just a nice polite consolidation. Unfortunately, what we got was just a face rip right up against these highs. The move stopped to scratch level, and then you can see the market just dumped straight into the move stop to scratch level. So you can see my ideal scenario here to set up a nice base for us to rally. It just didn't happen. So unfortunately, what it does mean, I don't think, did we go to new highs here? 574.10, 573.40. No new highs. 577. Nope. Not even close. So, unfortunately, what that does mean is that I'm just stuck on pause. There's just nothing for me to do here in altcoin land right now. Maybe I might let this set up a little bit more, maybe redraw these levels off of these kind of lows going forward and just let this breathe a little bit, sort of see where it wants to go next. But I never did get my sort of bullish ideal setup there to trade that higher. So as a result, and I had commented, of course, in the lounge as this was happening, I was kind of like, that's not what I want to see. So as a result, big hurry up and do nothing for Brian. So, as it stands right now, I'm going to be just sort of oh, interesting. Look at that. What a coincidence, eh? So I'm going to be watching how this range develops. The problem here is we've not come back to 33. So I'd actually prefer it come down a little bit further into this range to let this sort of set itself up. So, as a result, we do have an inside bar failure there back below a little trend line. The way I look at this right now is this is pointing back down now, and there's nothing for me to do on the long side here. So big hurry up and do nothing. Now, great example, and I just happened to see it out of the corner of my eye this morning. There's always a bull somewhere. This guy was up quite a bit higher here earlier this morning, but you can see the double bottom breakout. Nice level there on Geo. And I'm seeing this more and more, that a lot of these little Trex only names, they are trying to pump them. Now, just because they try, that doesn't mean they're going to succeed. And for whatever it's worth, full disclosure, I did go in and buy some down in this range, and I will be looking to sell halves on doubles on any kind of rallies up into here. So it's just a great anecdote, nice diversified portfolio, always got a few irons in the fire, and it turns out there's always a bull somewhere. And today it's Geo's day. Go figure. All right, I think I'll leave the free offering at that. I hope you got some value out of some of those levels that we talked about. All the best. Thank you so much, TRI community, Sjord, Jamie for their reports today, Kevin for being such an awesome co-host here, and really producer, director, and chief bottle washer in the back end. And big hearty thank you to our community. It's great to come into the lounge and people are chatting 24/7. You always know you can have a conversation with somebody. And of course, we are always spinning that PMA angle. At the very least, how can we learn from what's going on? Can we pick up anything new that we didn't know before? There's always something to learn, and that's the great part about TRI is we are constantly working together to try and get better and better and better every single day. Okay, everybody, have yourselves a great day. All the best, and bye for now.